Steve, hi. Thanks for your time and thanks for being here on this talk with me. So, uh,
My pleasure.
uh, so uh, just a small introduction. How was 2018 for you, and what are you looking forward in 2019? Any new exciting projects or events?
Well, I mean, I think 2018 was a pretty difficult year for a lot of people because we reached kind of the height of crypto enthusiasm, followed by a massive downfall.
Yeah.
So I can't say 2018 was one of what I would call a brilliant year for many people, myself included, because we watched crypto assets fall apart, and we saw a lot of projects just not sell their crypto back to fiat to survive. And unfortunately, that's still a necessity today to be able to do that, which shows you the early nascent level that crypto is in. Because for a project to start, if they just accepted Ether or Bitcoin and could survive on it, then you wouldn't have projects having to shut their doors because they run out of money. But of course, the massive drop in crypto and not being able to spend it as you need to has been obviously a problem. Certainly, I think we're kind of at the bottom here of crypto's bear market. We've seen a number of indicators that suggest that we've probably gotten someplace in that wave. We haven't reached a point where we're in a bull market as far as any technical indicators go that I've seen or looked at myself. But I mean, 2019 is going to be an interesting year no matter what, because we've got not a halvening, a third inning, can I call it that, of Ether, which will probably drive the price up by way of seeing a decrease in supply. We've got the 1 year before the halvening for Bitcoin, which has traditionally been a driver for Bitcoin's movement up, and that's roughly around May of 2019. We have the SEC reviewing various ETFs. So, of course, February 27th is a big date, which we will see come and go most likely. But there will be another series of consultations over the next 90 days, 180 days. So there's a lot of speculation that something could get
Yeah.
approved this year, which would be a major, major move. Um, Institutional money will most certainly start to move in large waves once we start to see the 50-day moving average cross over the 200-day moving average in terms of the daily charts in crypto for Bitcoin and Ether. That's without a doubt going to be a likely outcome if we start to see that kind of thing happening with the chart movements. There's a lot of innovation taking place. I certainly see a lot of people working on things despite the fact that previous projects have suffered. So 2019, 2020, I think are going to be continuously focused on innovation, and equally, I think it's going to be a lot about bringing what should we say? Bringing technology from a techie perspective into the hands of the more usable generalist, general population kind of usable applications. And we're seeing a lot of activity around banking. We're seeing a lot of activity around card services, and more of that's coming out now. Whereas in 2018, we saw it all kind of die, especially with WavePress crashing out and disappearing. So now we see a whole bunch of new things coming out, and what's coming out is obviously much more usable. So I think we're going to see that progress, and that's going to be the big shift for me is seeing these applications coming out and becoming usable. And 2019 is going to be a big year for that. That plus the previous ICOs who are still out there going for it, seeing deployment, seeing usage, seeing adoption. It's going to be I think there'll be a lot of that. We're going to see that. We'll see projects die, of course, because 1 in 10 startups survive. That's always been the statistic. It still holds true today. But if we're seeing 1 in 10 survive and make it and deliver great value, good. That's all cool. And we'll probably see other big corporates like Facebook, Amazon, Google continue to get more involved. We've seen JP Morgan announce that they're going to start doing some stuff in blockchain. We've seen other banks experimenting with Ripple. This isn't going to stop. It's going to continue, and it's going to expand for sure.
Yeah, I fully agree with you. And uh, as much as some people would love to speculate on the cryptocurrencies dying, due to the bearish market and the crypto winter, I also actually see that the market is becoming more mature, and shook off all the questionable ICOs, and we see the
Sure.
huge interest of institutional players and institutional capitals coming in, and It's these are the great signs for the industry and will definitely affect the price, the value of the cryptocurrencies in the future.
What do you see being the barriers toward more investment coming into crypto right now?
The barriers.
Yeah.
I think, well, just, it could be the lack of practical use of the cryptocurrencies at this point of time. So, just the institutes or, the startups need to deliver the solutions that will make it possible to use the cryptocurrencies in real life by, well,
Yeah.
normal people, and just because at this point of time is just more is it's being more of an investment asset, and just so it's quite limited to the people.
Sure.
So another question.
Sure.
Uh, let's briefly talk about the economic situation in the world. What events are of the most interest to you at this point of time, and how do you think they will affect the global economy in the future? And do you think any correlations with the cryptocurrencies?
Well, so it's an interesting question because there's been a lot of people that have tried to equate the relationship between Bitcoin in particular and the normal U.S. stock market. I think the best example we've seen is comparing Bitcoin to emerging markets more than to the U.S. stock market. That's something I've seen covered by a number of analysts in the industry. So in terms of the global economy, I mean, I think there's a lot of factors that are playing into the global economy in terms of, the future of the U.S. market, and is it going to continue on its, long run bull run, or have we run out of steam? What's the Fed going to do with interest rates? Trump wild card because he always is. Relationships with China and trade, Brexit, the populist movements that have been running across Europe. There's so many different factors. There's even like a trade war going on between France and Italy right now. So, there's so many different things going on. And then, of course, you've got all the Middle East, Syria and everything else, and all the immigrants coming into Europe that have caused problems. There's just so many different factors. It's very hard to see which of these factors plays out in terms of global economy and global growth. I mean, I kind of feel that in some ways, Bitcoin is almost running counter to let's just say for the moment, for the US stock market or the US and European stock markets, because they've been somewhat bullish together. I look at FTSE, the DAX, and the New York Stock Exchange as a comparison. So those three markets have all been more or less bullish. And during that kind of bullish run, Bitcoin's been the opposite direction for the past year. And there's an argument that says that, Bitcoin becomes sort of the next safe haven of gold, then it would be an argument that suggests that if there's any form of a stock market sell-off, people could move their money and hedge it between gold and Bitcoin, for example. Yeah. Why not? I mean, that's certainly a possible outcome. That could certainly fuel prices up higher than what analysts have been predicting as an example. I'm not suggesting there's going to be some massive market sell-off, but there could be, and I mean, there's no reason for there to be an ongoing upward trend. I mean, certainly there have to be points where there's profit taking of significance, 10%, 15% market drops. And there are companies that are already trading in bear territory in the US anyway. So, if that were to be a more widespread, then why shouldn't people want to move their money to something that's got longer term growth potential that will give them better than single digit growth returns? Because that's what people want. They want 20%, 30%. And if they're going to get 50 or 60%, they might look at crypto for a year or two if that happens. So, I mean, there's so many factors going on right now. It's really hard to predict what's going to drive what, right?
Steve, what do you think of the, I'm seeing that the global practice, it has not become the global practice at this point of time, but we see the Latin America, the Venezuela came up with their own cryptocurrency to fight the inflation, and people seem to...
Talking about the petrodollar from...
Yeah.
Well, that was a complete flop. But
do you think we'll see more of this in the future? The countries with a weak economy.
Well, let's reframe this a little bit. What currency does Ecuador run on today? They run on U.S. dollar. They abandoned their own currency. What's to say that other countries won't do the same thing, but then select Bitcoin as their currency of choice as a global currency? I mean, certainly there are countries around the world that are accepting Bitcoin more and more rapidly and more freely. If you look at Japan, Japan has been very, Bitcoin open friendly generally. Sweden has been somewhat accepting of Bitcoin. Belarus gave people a 5-year tax break on all types of crypto. Malta and Estonia have been very open toward, regulation of companies form and use crypto. And Estonia, you can even use Bitcoin to pay for forming a company. So that's pretty cool. And even in states like Wyoming in the U.S. now are becoming very, very crypto-centric and friendly and are, interesting of all states. And Wyoming is not a state one thinks of normally, but they could be a state that leads the way in terms of where crypto goes. So, there's a lot of things that could drive countries or states in the U.S. or territories to start adopting a currency over a national currency. It could happen. I mean, this is just blue sky thinking and just saying what could happen, and anything could happen. I mean, the other thing that's really interesting for me is that Bitcoin always trades, more or less everyone trades it against the dollar, which in some respects has strengthened the US dollar's need or usage globally, at least in the short term. But on the flip side, you have countries that don't necessarily have a trade pair between each other, like China and Russia, for example. There's not a lot of trade between the two currencies. They do all their trade in dollars. So what's to stop them from moving to a cryptocurrency for trading between each other instead? I mean, there's just a ton of things that could happen along the way, or trade blocks that could set up their own currency and have a single currency they use for trading within each other, much the way JP Morgan is using a coin for institutional traders to trade or to send and receive or buy and spend within each other within the JP Morgan ecosystem. So there's lots of redefining going on here, and I don't think we know where it'll land, but I think there'll be a lot of different permutations over the next 2 or 3 years that will form. It's going to be interesting.
So basically, well, that pretty much leads to my next question: is your opinion on the place and the influence that cryptocurrencies have right now in the scale of global economy model? So, do you think that the cryptocurrencies went all the way from the magic coin from the internet to the real asset, or do you think, well, it is still limited by the real use of the cryptocurrencies?
So let's separate Bitcoin for a moment from cryptocurrency, because they're really two different things, in my opinion. So Bitcoin as an ecosystem is widely used within the ecosystem. Many products and services are out there running where the core price is dictated in Bitcoin. There are companies that sell software and they sell it with Bitcoin. There are mining and cloud-based services that are only running with Bitcoin. So it is its own ecosystem that's self-sustaining and working as it is. I mean, from that standpoint, businesses are running and operating just using Bitcoin. But when you talk about other cryptocurrencies, then there's a whole different discussion that takes place about what kind of adoption might we get. So I can imagine things like industry-specific things like medical records, and being able to service my medical needs on a global basis, not on a local basis. So think about a person that lives in Germany and they want to travel to India and they need medical assistance or medical care or some other support. Then if they have their medical records available and can share them with a doctor where they are, or if they need to be able to call a doctor when they're traveling, you start talking about mixing things together, like, travel insurance, medical insurance, medical records as a service on the blockchain, right? That is an interesting shift from national or individual specific to a global basis in which people can operate and be more efficient. So I'm using that as just a simple example, but I think there's going to be many more examples like that when you get into cards and payments, remittances, and transfer of funds globally within moments, on the weekends and the evenings, and spending money. Certainly within telecoms for being able to issue SIM cards on demand when you're traveling, through the blockchain. All of this stuff can change. The relationships between vendors, brokers, dealers, suppliers, legal people, all working together in ecosystems for real estate, for example, and running efficient systems through blockchain. So interactions between parties. Well, these are all things that I think are going to continue to evolve. They're already starting to happen. So I see that both of these things will continue to evolve. Some of them will succeed. Some of them will fail on the first and second try, and then someone will figure out a way to solve it on the third try. But these are all going to be, evolutionary traits that we're going to experience, I think.
Thank you. And well,
Pleasure.
let's speak. Let's speak of
Good. They're great questions, by the way. I really appreciate them.
Thank you very much.
Making my brain really work hard for a Thursday morning.
Thank you very much, Steve.
And by the way, I'm not really in San Francisco, but I just wanted to put up a nice background image because
come on, why
it's nice to put something up a little bit, characteristic of a morning. But it's morning for me anyway. So.
Oh well, I guess it will give up. It's a great eye candy for anyone's watching this video. So, Steve, comparing the investment attractiveness of cryptocurrencies and traditional market assets.
Yeah.
What's your opinion on that? Well, I'm thinking, the first thing that comes to my mind is, sure, the difference on the risks that you get, when investing, and the second one, would be the capital you have to start, to join this or another. Basically, if we speak of the traditional, let's say traditional hedge funds or any similar products that will, result in the good returns on your investment, will usually require a quite high entry fee, starting, I guess minimum with $25,000 or $50,000, whereas crypto seems more like accessible for anyone, and at the same time it offers the good results on the volatility of the market.
So it depends which country you're in, because like in the U.S., I would say that's probably not necessarily true, because you can take $5,000 and you can go buy a couple of shares of Apple and a couple of shares of Microsoft and just sit on them. But of course, if you're talking about investing a larger sum and you want someone to manage it for you, then certainly the difference between investing in a hedge fund as an individual in traditional markets versus in crypto funds are accepting as little as $5,000 or sometimes even less to start. Whereas if you wanted to do exactly the same thing with $5,000, you wouldn't be able to do it with a hedge fund. Although there are money market, accounts like Vanguard where you can put in any amount you want to put it into different funds that are, managed funds. So I'd say that there's still some legitimacy around being able to take any $5,000 and you can invest it in traditional markets or crypto markets. But to answer the other half of your question around the risk profile, you're certainly right in saying that crypto is far more volatile and carries more risk with it. And whilst I, of course, never advise people on how they should manage their money, I think the rule that's always best to apply is don't put all your eggs in one basket. So absolutely. I would say for anybody that looks to invest generally, diversify your funds across a number of different things. Keep some of it in traditional markets, keep some of it in bonds, keep some of it in cash, keep some of it in crypto, but don't put more in than you can lose in any one industry sector, because the stock market could go down and Bitcoin could go down with it, or Bitcoin could go up and the stock market goes down. And it's, as you will know, Jan, because you're in the world of the fund management and hedging, it's always good to hedge between something going up and something going down. So if one goes up and one goes down, you end up net neutral. If both go up, you win. If only one goes up or down, you're still neutral. And there's only 1 out of 4 outcomes that's bad, which is when they both go down. But at least you've got a 1 in 4 chance of failure and a 3 in 4 chance of success, because you'd rather break even or gain. So using that same kind of principle, I would say that, sure, it's good to invest something in crypto because it's nascent, it's early, we're at the bottom-ish of a bear market. Hopefully it is the bottom. And with that, there's opportunities to move some of your money in. And if it goes up and you see others jumping in and you see the investors and you see the institutional investors moving in, then certainly consider putting a little bit more in. But of course, never more than you can lose. Rule number 1, and always weighted percentages of your total assets. Don't put all of it in once, because it's not a good investment thing to do.
I guess,
unless you're a gambler.
Unless you're a gambler. Well, which brings me to the idea that, if you want to do the trading on your own, even though there are lots of guides on the internet, you might want to think twice. Because,
yeah, I mean, look, trading isn't for everybody. If you're a day trader and you know how to day trade, that's great. It requires, in my opinion, more sophisticated systems than the exchanges offer us, because most of the exchanges don't have very sophisticated trading parameters, which is a pain. But more importantly, crypto runs 24/7.
Yeah.
And nobody has the time to do that. So that really requires that in the end, everybody should really have some sort of an algo trading bot running for them in reality, because I can't trade when I'm sleeping. And if something happens in the Chinese markets when I'm sleeping, what am I going to do? Nothing. And if I haven't set my parameters correctly for limit orders and stops and all the rest, I'm also stuck. And as I said, that's where the limitation is with all the exchanges, is you can't set limits on the up and the downside at the same time. You can only do one or the other. And that's kind of a shame, really, that they're so limited. So it's a frustrating place to play, because there's not enough capability in these exchanges to trade this way. But it's, we have to be smart how we do it. And I wouldn't recommend that most people spend their days doing day trading. There are, little mini trading bots out there that you can play around with too, that work reasonably well, but do require a lot of configuration. And if you don't know all the different parameters of MACD and stochastics and RSI and SMA versus EMA and EMA cross and all that other kind of technical terminology, then I would say probably not best to start by experimenting and learning, because you'll probably lose more than you gain trying that. So that's when you look to alternative solutions, of course.
Well, we're getting to the most interesting part of our discussion. Well, I guess that's the part, well, everybody is waiting for, is just let's speculate a little bit on the future price of Bitcoin. And you have mentioned it in answering the first question, that you see lots of institutional players coming in, and just a matter of time when the big institutional capitals will be coming in. And people are feeling quite concerned about the crypto winter. Well, luckily we had, we saw some recovery starting from Monday. But what's your take on, the second half of this year and maybe the next year? Well, especially when the halving comes in, and it showed both in 2012 and 2016 that it has created a huge volatility on the market,
Yeah.
and definitely showed the incredible highs. So I'm pretty sure that 2020 will be, well, another big bulls run before the market goes into correction.
I mean, if we can go by anything, which is, I'll just use historical data, is that a year before every halving for Bitcoin so far has been when the coin started to rise. And we're heading there now. I mean, we're now in end of February-ish, and we're heading toward March, April timeframe. And it doesn't mean we have to wait till May for it to start. It could start sooner. It could start later. The other thing I always say to people is, what goes up must go down and must go back up again. It's just normal up and down. So I can't predict when it will go up. I've been doing my own, trading indicator episodes on my own Patreon show, and what we're seeing in those charts is that we're not at a place where we can call it a bull market, because the 50-day is still below the 200-day moving average. That's the best indicator that one looks for, is trading above 200-day moving average of anything, and of course a 50-day traveling above 200-day. Because we're not there right now, the best I can predict is we'll eventually get to that point, and then we can predict the next wave. But certainly I would imagine the next wave would be bigger than the previous, simply because we're going to have more adoption. And if you look at the number of people using Bitcoin today versus a projected number of people in the future, I've seen numbers suggesting that we're in the 20 million usage range today of Bitcoin, 50 million in the future. Well, that plus a halving would certainly dictate a price rise. I'm just taking two generally statistical pieces of information and joining them together, and that should drive the price up. But I wouldn't be able to predict when and how much. I can only say that a halving will shorten supply. A bull run will certainly drive more people to buying. And we'd like to see all those things happen together.
Yeah, absolutely.
But of course, adoption is critical to all of this. We need to see more tools and more techniques and more products and more services accepting Bitcoin and other cryptocurrencies. I mean, I don't mean just Bitcoin. When I say Bitcoin, I do mean the broader market generally. But, there's a lot of adoption that's necessary too, through other products and services that will enable us to use it more easily. and that's going to be a major factor that'll drive it as well.
So for those thinking whether they should get some cryptocurrencies right now or should they wait for the lows, I think it's pretty much the time.
I would say you go and talk to a financial advisor
Well,
because
just
I
just
cannot give
our
people advice
speculation.
on when they should buy. I would say,
This is
ask
not
your
the
friends,
advice.
get
This
into social
Yeah.
groups and check and see what people are saying. Certainly, we've hit some sort of a bottom. It's maybe not the final bottom. I think it might have already been personally, but I can't advise people on when to get in.
Absolutely,
I would
absolutely.
just say, it's good to get advice from others that are professionals in the community like yourself and find out, when's the right time to get in really and let those people help you to figure your way through it because, if I get it wrong, then people could come after me. So I have to be very careful
Yeah.
about that.
So anyone's watching this video, well, these are not the financial advices. Well, these are just our thoughts and our predictions on what's gonna happen on the
Absolutely
market.
right.
So,
Yeah.
Steve, and we've got to the last one. So, speaking of the quantum hedge fund, you know how we work, and you know what's our operations. Do you see any potential growth points for the fund in the futures? Like, I know that there are more and more people saying that at this point of time we should not consider the ICOs and the STOs are the new thing. Well, what are could be the potential growth points for the fund?
Yeah. So, I mean, first and foremost, I mean, as any fund, you've got to pick legitimate, real projects that have real potential and real value. Of which there's a few of them out there that have got fantastic investors. If you've got, for me, what I'm looking for as an investor is if I find a fund that's picking projects that have big backing from Pantera Capital, from Draper, from Sequoia, from Samsung Investments or from Neo Foundation or whatever. If I see people that have got, projects like that have that kind of backing and funding already, then I already know there's some legitimacy to the project. And then if those projects have good fundamentals as well as good technicals and you're trading on that, great. As far as speculating on things like ICO and STO, I would say, well, we're still in a bear market as far as ICO goes, but there will be a point where the ICO market returns. As far as STO goes, I think it's very, very unknown, uncharted territory. I mean, you can't really make money on an STO because you got to wait a year as an accredited investor anyway. So I can't really see the value of STO and hedge fund unless the hedge fund has a short and a long game that they're playing for their investors. And the long game will be we take 10% of our funds and put it into a long fund, and we expect it to be a 2 or 3 year return. And that's very speculative with STO because we don't even know how that will play out in the market. We have a lot of uncertainty with STO. We have a lot of regulation going on. It excludes the crowd from participating and only allows accredited investors in. We don't have exchanges that are really out there in any wide form for STOs to be listed on, and very few STOs that have actually started, finished, and listed, if any. So it's too nascent for me to comment on the investment portfolio for STO at all right now. I think there are some very interesting STOs in general out there. They need to prove that they can raise money and at least get funded, and then we'll see how that plays out in a year. And we could circle back a year from now and say what actually happened in STO land, last year compared to this year. I would say we probably, I'm personally looking for some sort of middle ground between ICO and STO, a new asset class which we don't have yet, that satisfies regulators and satisfies the crowd so the crowd can participate. We don't have that. That's what we need in order to move this all forwards. And I don't know what that looks like. I don't know if it'll ever exist. That's kind of like what I feel we need, which would I think be really, really cool because that would enable you as a hedge fund to also participate in some of those in-between projects that now allows all of us to get into something that's more hybrid. But right now, I'd say if there's a place where I look for investment, it's in projects that are already out as established ICOs that have great funding, great fundamentals, that have a great product that's in the market, that's moving ahead. They're able to demonstrate that they're monetizing or user growth, one or the other or both. Those are the things I would look for as an investor more than anything. The ICO market, yes, there will be some new ones coming out probably, I'd imagine, over the first half of the year as the market begins to move out of this bear market, I would hope then we'd have some new ICOs that really have some legs and can, be potentially early investment opportunities for you. Because if you're in it and people are invested with you, of course, that would be a good outcome. But we're not there right this minute. It's hard to comment because we've been in this bear market for such a long time. It's almost a year now, so it's hard to see. But I could certainly imagine that being the case from the ICO space in particular. STO, not so much, because it takes a long time for the regulation and the processes to complete before those things can even trade.
So, Steve, that's pretty much it for the questions. That's
cool.
it for the questions. So thank you very much for your time.
They were great questions, and it's certainly made me do a lot of thinking here on the fly. So I've tried to give you very, detailed answers. Hopefully they were, what you were looking for, because it's it's very hard to give people good answers on questions like this without overstepping our bounds on our personal opinion, because of course, as you know, it's a tough market and we don't want to mislead people in any way.
So thank you very much, Steve, for your time, and I'll be looking forward to talk to you again.
Jan, it's been an absolute pleasure. Thank you for having me on the show, just to bounce around ideas and talk about what's happening in the market. And I wish you all the success with your company, and I hope it does well. And do keep me informed on how you're doing as well.
Thank you very much. Okay.
Thank you.
Cut. Thank you very much, Steve. It was amazing, really.
Great.
It was really good. So,
cool.
Could you tell me just in a couple words about these guys from Korea? What kind of marketplace do they have? Because they seem to be, overly busy or something.
Well, they're trying to raise funds for their project right now.
So I just quickly read through the two-pager English language two-pager they had. So it's basically some tokens, like utility tokens or something, to get listed or something.
So it's a marketplace. So crypto hedge funds can be on the marketplace to market themselves to investors, because, as you know, the hardest thing is to raise money, to get investors to put their money into your fund. So what they're creating is a marketplace for investors to sign up and to be able to shop around in the market for all of the different hedge funds that are listed there, and for the hedge funds to list themselves, so that you have a range of, or a market of hedge funds that are marketing, this is our strategy, these are the types of performance, this is the performance we've had year on year, these are who our traders are. As investors, we can also participate in being rewarded for commenting on the performance, on rating the success of the fund.
Sort of a customized catalog for the investors.
Well, it's really, to me, it's more like, how do I even find a hedge fund in the first place? So for me, it's impossible, right? Because there were 650. Apparently, about half of them are gone now. So let's just assume there's 400 hedge funds around the globe. How do I know which ones are legitimate?
No idea, unless there's some kind of.
So if they had 100 hedge funds that were on their platform, I would be able to know that there's 100 legitimate projects that are investing, and I could see the performance of those funds. I could see who the traders are. I could do KYC once through Pantheon X's platform, and that could then be KYC to all of those investment platforms in one time, right? Why do I want to do 10 applications with 10 firms? Pain in the ass. Yeah. So for me, the onboarding process as an investor, the ability to shop around and look at different funds, the ability to look at how people have scored and rated those funds, and to be able to pick the ones that I feel might be best for me, and then to decide, well, you know what, I'm going to take 10K, I'll put 3K with this one, 2 with that one, 4 with that one, and I'm just going to experiment and see how they perform, is super cool, because it makes my job easier. I just do it all through one interface. For hedge funds, for me, the benefit is I'm a hedge fund. I'm trying to grow, and it's very hard to market myself and to show and demonstrate I'm legitimate. And now I've actually been onboarded to a platform that's run by XVCs, and these XVCs have onboarded me. So I now have social proof that I'm real, and I've got the ability to attract a new set of investors that otherwise would never have heard of me. It's kind of a win-win between connecting the investors. So it's, how do you connect the investors that want to invest with the hedge funds that want to find investors?
Yeah,
hence the word marketplace.
let's say it's sort of a leads generator through the credibility marketplace, something like
Yeah,
this. Yeah,
you could look at it that way. Although it's more than about leads generating, because I mean, there's a lot more to be said than it's just, it's not about lead generating leads. It's about actually getting investors onboarded, but giving them the opportunity to provide you feedback and comments and to score you, and for you equally to work hard to perform and provide lots and lots of legitimate information so people can, make their own decisions. And some will perform and some won't perform. And it creates a more, it would be no different than, you go to a hotel, and hotels that perform get high marks and those who don't, like Travelocity, get low scores. So, the Travelocity is a marketplace of hotels where you shop around to pick which hotel you're going to go stay in based on people's feedback
Steve, do you have an
and
idea?
to book.
Oh, sorry, do you have an idea what it takes and how much it takes? Just to get listed there. How do these guys work, and have they already listed anyone, or they just starting?
Well, because their project is still in the ICO phase, I don't know how many firms they've actually signed up. I've introduced them to you and to one other firm, and to be honest, I'm leaving it to both of you as firms to assess the value benefit. Of course, they needed to make money too, so they have to take some percentage of the commissions, because of course you wouldn't have the investors without
Yeah,
them.
yeah,
But they're also making it so that there's a level of transparency, so that, for example, the investor wouldn't do any better going to you direct and skipping out of them, right? So it's a fee for that comes. Let's just say if you were charging 30% all the time, you might give 10% to them, or 1/3 of your profit, but you have all these investors, and if the investors then left Pantheon and came to you, you'd still charge the same 30%. So
yeah.
there's no net benefit in the user bypassing the system to go to you direct, but you're getting a whole new set of users that you wouldn't have gotten otherwise by marketing yourselves.
Yeah, absolutely. Well, that's
So
just
I think there's a logic to the whole thing. I'm not sure how successful they've been on the onboarding side, because I was trying to help them structure. I mean, the 2-pager, I wrote that. So I mean, most of it I wrote it. About 90% of it's my writing. So I tried to make it as clear as I could for them as an advisor in terms of how to take it to market. But ultimately, how they execute, I don't know, because they have to execute. That's their job. I've tried to give them the structure in which to do it.
yeah, because well, we're
But now they're fundraising. They're running the ICO to get the funding to run the actual project, because, of course, they've built. I haven't seen their MVP yet, but I think it's nearly there, nearly ready. It was
yeah,
supposed to be out.
yeah. I've seen their roadmap, but I don't remember if they got to the MVP version yet or not.
But I mean, the key for me, I mean, is it's great to have logos on a piece of paper that says that the firms are signed up to it, of which they have a few. But of course, you and I both want to see it actually running and working, which is more important. But they have the right ideas,
Yeah, yeah.
and the question is how they execute those ideas, and that you and I won't know that. And there are questions around who has access to the private keys: you, them, multi-sig. What happens if you fail? What happens if they fail? How do you get access to the funds? And we don't want to see failure problems. So we need to make sure that those types of mechanisms are in place. So, for example, you might want to say, we want to have 5 people with multi-sig, but we get 3 and you get 2, or we have 7 and you get, we each have 3 each, and then there was some mechanism so that there's a way to make sure that if something goes wrong, both sides have the ability to, you have the ability to withdraw the funds immediately if they collapse.
Yeah, I
But
know. Maybe
they have the ability to control things in the event that you collapse, to return the money back to investors. I think that's the key to making this all work. And I don't know how they've worked that one out yet.
maybe that could be figured through the some smart contracts, or I don't know whether you can apply that to this case.
Yeah, I mean, there must be some way to do it. I don't know the mechanisms, the financial mechanisms for it, but I know that's been a question that's come up on how do you make sure that we each have control of the private keys, and equally, where is the funding at? Where is the money actually being traded? Because it's not traded within their platform, because their platform is just a place for investors to put the money in. But then the money needs to move to exchanges to be traded. And you have your trading style, and someone else has their trading style. You keep 50%, someone else might keep 30%. So the question I would have, of course, naturally is, how does it actually work?
Yeah, absolutely. Yeah. So I think we should,
And on that one, I don't know the answer. I haven't seen a comprehensive answer that's explained that. So the explainer video on that would be a great thing to see, or for them to explain it in terms of like the real mechanisms of the financial modeling behind the scenes.
Yeah, yeah, yeah. I see. I see. Well, just we'll keep them in. We'll keep with them in touch, and we'll see. Maybe we should arrange a call and talk this through. So, because
I would ask them the questions. Say, I've read your 2-pager. Please explain to me how the model works, and get them to explain it, because that's what I want to know.
Yeah, yeah, yeah. That's true. So, Steve, once again, thank you very much for your time.
Pleasure.
And
sure, no problem.
Thank you that you haven't forgot to bring these positive vibes together with you today, because there were plenty. It's a real pleasure.
Oh no, this is what I do all the time. I'm YouTubing every day. I mean, I've recorded 3 videos that aren't even out yet, and I'm just about to jump in 2 minutes. I'm jumping in to do a mining episode with a Siberian mining company. I've got Bancor lined up for the end of the month. I've got Zencash, Skycoin, and a new show. Oh no, and Coin. What's it called? Jin Coin with Komodo coming on the show next week. And we're launching a new series on women in blockchain, which is launching next week as well. So I have so many recordings lined up. It's just insane. I have to be in television mode when I do this kind of stuff. It's just natural now.
It's awesome. Really, really.
So, okay. But anyway, so if you need any other help with your company, like I said to you, I do this kind of strategic advisory stuff for a living. That's how I help companies. So
very helpful. You've been really very helpful.
So if you need any other help like this on a more regular basis, then I'm sure we can have a discussion about that. And I'm very happy to do something that's more, formalized rather than what we've done so far. But we can certainly discuss that. I mean, I'm open to it. And you seem like an awfully nice guy, so I'd like you to succeed.
Thank you so much. So, okay,
Steve,
just let's keep in touch. Well, you have a great day. And, well, if anything, I'll write to you on Telegram, or you just, okay.